Eric Muathe at Muathe.com with world market analysis for the weekend of May 7th and May 8th, 2016. Let's begin by taking a look at how Asian markets closed for the week. On Friday, we can see some of the biggest movers were to the downside on some of the major markets there. Take a look at European markets at the end of Friday's session, and we can see for the most part down or an unchanged day as far as the major averages are concerned. If we take a look at the Americas with about 3 hours to go before the close, we are looking at the Canadian market slightly down, or the Bovespa is down, the Brazilian market slightly down, Canadian market up about 0.75, and with about 2.5 hours to go in the US, we are looking at markets pretty much, let's say, unchanged for the day. Let's take a look at the charts. Let's begin by taking a look at Japan, which had a relatively huge down week. As you can see here, we can see that on the weekly, we now have rejection at the 50 level on the weekly RSI, which tends to be bearish. The last time we tried to move above 50 was here during this attempt to recover at the end of 2015. And since then, the market has not traded above the 50 level. And as we had discussed coming into this past week, the market was showing two levels of resistance. One of them was a line connecting RSI highs on the weekly. If you draw it like that, you can see it connected nicely with the highs throughout the highs of 2015, late 2015 again, and also here connecting to the highs of 2016 so far. There was also another trend line on the RSI which was coming into play before this week, and we discussed this during last weekend's market analysis. We broke through here coming into 2016. We had come back and we had uniform activity recently above the red line and back below it, suggesting that this is a trap, and that's exactly what we got. So right now it looks like the market is still showing negative trades. Keep in mind that here there's the threat. Should the 10-week moving average make fresh 52-week lows, then more than likely the price is also going to have to make fresh 52-week lows. So we need to watch this, because generally speaking, whenever you see the 10-week moving average make a fresh low or a fresh high, it suggests that the price is also going to follow. If we take a look at the monthly chart for the Nikkei, what we see here is the potential to break to fresh monthly lows below 2016's current monthly closing low. And the level to watch here is any movement below 16,026.76 would suggest moving to fresh monthly lows. Keep in mind that would correspond with a bearish move on the monthly RSI moving to 3-year lows. And we can also see that we've already seen that the MACDs right now are trading at 3-year lows. So here we already see that the MACDs are bearish, and here RSI also looking like it could also move to 3-year lows. The key is whether it can hold above 16,000, again 026.76. Any movement below this number would absolutely be bearish. If we take a look at the Indian market, the Nifty, if we consider the most recent monthly closing high there, monthly closing high, and this recent monthly closing high, you see that there's a line that develops, and this line, in my opinion, is resistance for now. So right now we are below that line early on in the month. As long as we stay below that line, then the market has a chance of continuing to move lower. Otherwise, market bulls would like to see the market move above this line, which has been formed by the most recent monthly closing highs. So below that, markets has a slightly bearish feel and behavior. Above that line, then the market has a chance of continuing to move higher. If we take a look at the 2-year weekly chart for the Nifty, we had discussed this coming into this week. We had still been dealing with topside resistance. There was one layer of resistance as of the last couple of weeks, and the market hit that resistance. And we had also come back to test the recent break on the RSI. So we can see that break right there sometime in the middle of last year during this drop in August, and we had drawn a line from there that the market was coming back to test. You can see that the market did show resistance on both lines, and hence the recent pullback. So here, if you take a look at the 2-year weekly, we can clearly see that the only way the market can substantially move higher is by clearing this weekly closing high for 2016. And the level to watch there is for the market to break out above 7899.30, which happens to be this weekly closing high for 2016. So the market does need to move above that if it is to see higher prices. Otherwise, it might suggest that without a breakout that the market could struggle. So that's one layer of resistance. There's also another line connecting recent weekly closing highs, this weekly closing highs, this one here, and also the most recent weekly closing high. If you connect all of those points, they make a very nice trend line. In fact, let's do that on a clean chart. You can see that, take this weekly closing highs and draw a trend line, and the market still has not been able to move above this trend line. So we need to clear that trend line and also need to move above 79. So this weekly closing high here needs to be breached to the upside if the market is to see higher levels. And again, let's just give you the number here, 7899.30. Failure to break out would suggest that the market could see lower prices. Keep in mind, we closed above RSI 50 on the weekly. Should we drop below RSI 50, expect to see a big down week. So all that has been slightly bearish, but now let's take a look at some bullish short-term considerations. And what we have here is, in my opinion, right now the monthlies are bearish, the weeklies are bearish, but I'll show you that the dailies look okay, and so do the hourly charts. So there's a fight going on within all these time frames. Generally speaking, whenever you have a conflict between time frames, the bigger time frames should be given more consideration. So net, I still hold the view that the market needs to prove itself. Otherwise, the market still has the potential to go lower. Now, let me show you the bullish arguments here for the Nifty. And it's true for many markets across the globe. It's coming back to test recent weekly breakout. So if you take this line here, you can see that once we moved above this blue line, which was previous topside resistance, which was during this period here, the market has had a nice run. And we've tested this line before. We held and bounced back above the blue line for this entry. And here we are also bouncing back above the blue line. If we can do so, then the market has a chance of recovering on a day-to-day basis. So this line here does offer bulls a reason to continue holding. Bouncing back above this line would be bullish. Also, bouncing with the 50 around the 50 RSI level with uniform activity tends to be bullish. And here the market has a chance of bouncing back above 50 for a bullish move. So that does offer some type of bullish argument. Take a look at the hourly for the Nifty, and you can see that it looks okay, because if you go back to the recent lows of the lows here, which began with this RSI movement somewhere there. So the RSI moved above that range. We can use that for future reference point, and you can see that the market has already bounced once before on the green line for these lows, and here we are also holding very well. And as long as the market holds the green line, we can see that the hourly is also predicting movement to the upside. If we take a look at the South African market here, we can see that it's had a relatively huge drop over the last week, which makes sense because we are drawn a line connecting RSI highs, something like that. And the market had hit this twice over the last couple of weeks. In fact, we can even say it hit that line 3 times and failed. So we were expecting a pullback. Also coming back to test the recent break level. So this break level here brought the market off the highs. And so we draw a line from there, and it is exactly where the market was finding resistance. So those 2 lines offered resistance. Now we are seeing the end result of that, which is a pullback. In fact, if I show you the long-term monthly chart here, and this is a monthly chart going back to 1990, I'll draw a simple line right here. And And what you want to see here is the periods that the market stays above that blue line, we tend to have a nice upward trending market. So take a look at all these periods here. Connects nicely with this upward trending market. And again, you can see this period here, huge period going back to 2010. The market held above that blue line, and which corresponds with this nice strong uptrend here. Now you'll also see that conversely, all those periods where we are below the blue line, we tend to have the market dropping. Also, you can see here the same type bearish behavior during this period, and now we are back below. So that suggests to me that the monthly chart here is showing that as long as we are below the blue line, chances are that the monthly chart is suggesting to expect lower prices in the coming months. If you take a look at the French market now, you'll see that this is potentially one of the worst looking, or worst, if not the most bearish monthly charts out there. Here we are trading below 2016's monthly closing low, and as long as it is trading below 4353.55, this instrument has a chance of seeing a huge drop. So here it is below 2016's monthly closing low of February. Anything holding it below that number is very bearish, especially given the fact that we have the minimum requirement for a major drop, which is RSI moving to 3-year lows. Check. We got MACDs trading at 3-year lows, which is very bearish. So check, check. As long as the market is trading below 53.55, the French market could be under some serious consideration for lower prices. If you take a look at the German market, over the last 2 weeks we've seen a pullback, which is not surprising because it had come back to test the line we were watching for resistance. This simple line here was the break of the highs of 2015, and so we had drawn a line here, and we were suspecting that the market would find resistance because previously this had been resistance area for the highs there. We touched that line there and were rejected with uniform activity for the highs there. And again, over the last couple of weeks, we see that it did show resistance. So that weekly chart was suggesting a pullback. And in fact, we can see here that just like the Nifty, it needs to clear this recent 2016 weekly closing high. So it needs to clear that resistance at 43.75. That is what the bulls need to see the market move above that level. Otherwise, the market continues to be held suspect. You can also see here that we need a breakout similar to this breakout here in late 2000, I guess early 2015. So once we got the breakout, you can see the market went on a nice run. So without a breakout, we have to assume that the market here should be sideways at the very best. Otherwise, the daily, as we see in other markets across the globe, is acting okay, coming back to test an upward sloping 50-day moving average. So we haven't seen a major break. We also see that it's coming back to test the previous recent good entry. So there's an entry somewhere here. Let's call it somewhere about there. The RSI moved above that range and we came off the lows of February. Draw a line from there. And you can see that the market has used that green line once before, in fact a couple of times before here, for a nice re-entry during a slight pullback, double bottom support for a re-entry here, and now coming back and showing some type of support. So as long as the market is bouncing back above the green line, there's a chance that the market could hold this level. Obviously, if the market does not hold the 50-day moving average and we crack through that, and if it cracks through the green line, then that's when we are going to see the market really start sliding. Sticking with daily charts, let's take a look at the FTSE. Just want to show you two lines that could be coming into play and could offer the FTSE some type of daily support. It's a simple line connecting recent RSI lows. So right there, looks like the market is trying its best to hold, which would be a good thing for market bulls. Also, you can extend the same line backwards, so you can actually even go backwards this way, and it still makes good contact with these lows on the RSI. So around here we're either going to see some type of support and the market bounce on the daily, so it could be support here and a nice bounce. Otherwise, if we do not hold those two lines, then the market is going to have to show some negative reaction, because a break of that support line would definitely be bearish. But for now, we have to conclude that net, as long as this line is holding, the market could actually have a reason to bounce. There is also one more line, simple line coming off the lows here in February. The RSI movement did generate a good low. Market has had a nice run since then, so we can draw a line from there. And as of right now, we can see evidence that if the market holds that green line, then we are definitely going to see a bounce. So holding above that line would be bullish, and that also does correspond very nicely with the previous line we drew. So it does correspond with the previous RSI lows line. If the market can bounce back above those two lines, then we can expect some type of a bounce. Otherwise, breaking through those two lines would be bearish. Again, staying with the daily charts, take a look at the Canadian market on the daily, and here we can see that it is holding nicely above both the 50-day and the 200-day moving average. Also, keep note here that we are seeing a market that is bouncing back above RSI 50. The last time it bounced above RSI 50 on the daily was here for this nice re-entry, and over the last 2-3 days we've bounced on the 50 line, and we are moving higher as of right now, which could explain this most recent bounce. There's another view which connects the previous high, so this RSI line here. Ever since we moved above that, so let me extend that line, ever since we moved above that, which is this move here, or this price move, we've bounced on that line here for the lows there. We bounced again on the same line for those lows, and now over the last couple of days we bounced on that line for those lows. So as long as the market is bouncing back above the 50, we have to give it the benefit of the doubt to move higher. In fact, if you take a look at the hourly, coming off the lows of February here, you'll notice that the RSI did move above that range. That RSI movement here coincided with the price making this low, and a nice move since then. So we draw a line from there, which is what I call the uniformity line. In other words, every time you have uniform action on the line, it tends to be a buy signal. Here we have two instances of double bottom support and uniform action for the lows there. We touched the line there for the lows there. We held for those lows, held here for the lows there, and now nice double or triple bottom over the last couple of days, and we are seeing the market moving higher short term. And again here, the key is whether the market can move above the recent weekly closing high for 2016, and this is consistent in many markets across the globe. If the market is strong, we need to eventually clear resistance above the recent weekly closing high, and the level to watch here is 13,951.45. Any breakout above that would be good for market. Yet on this weekly chart, we can see that there's a challenging spot here. That's why bulls need to insist on a breakout, because we are coming back to test the break here on the weekly, which brought the market off the highs of 2015, and right now that's a challenging spot. As you can see, we've been unable to move above that red line, so we need the market to eventually move above the red line and to break out on the weekly to finally clear that resistance. So a lot of confusion here. Some of the daily and hourly charts look okay. We've seen that in other markets, but if you take a look at the long-term picture, for example, if you take a look at the monthly chart, you can see that the monthly chart is showing RSI 50 rejection as of right now. So again, the monthly chart's not so hot. As long as the monthly chart stays below RSI 50, one can expect the market to be challenged. And again, we see this monthly chart being a problem for many markets. Take a look at the EWZ, the ETF that tracks the Brazilian market. If we go back to a monthly chart, and this is a monthly chart for the EWZ going back about 13 years, we can see there's a simple line that is coming into play, which is the top side resistance line connecting the highs here. You can see right now we are coming back. We've hit that top side resistance on the monthly, and for now it is showing that this is a resistance point. Keep in mind that the RSI has failed to move above 50, which could be a concern. Also, there's another way you can look at this, which is the monthly chart being, as of right now, on the negative side, because the recent break here, that break in 2014 brought the market off these levels here in the 40s. Draw a line from there, and you can see that that line is right now seemingly becoming resistance as the market is weaving itself above the line and back below it with what looks like uniform action. But the key here is whether the market can continue showing resistance based on the RSI monthly topside resistance. So we have the monthly saying one thing, and then the daily charts, just like we saw with the Canadian market, showing a different type of behavior here, because we've been bouncing back above the 50. Here we held the 50 on the daily for a nice re-entry, and we can even say this was bounce back above 50 for that re-entry. We bounced on the 50 here for that re-entry, and now we are trying our best to hold above that 50 RSI level. And there's the other line connecting previous highs, just like we saw in the Canadian market. Ever since we moved above that trend line here, the market's been bouncing above the blue line. So whichever way you look at it, right now the market on a daily chart does look like it is stabilizing. So until the market stops holding the 50 line, and if the market moves below the blue line, that is when we might finally see a serious pullback. For now, we have to give the market the benefit of the doubt. Keep in mind, as I mentioned earlier, on most of these charts, what we observe here is that the monthly charts are bearish, weekly charts are bearish, in my opinion, that is. Daily charts are good, and hourly charts are good. Because of this confusion, we have to assume that the monthly and the weekly charts are eventually gonna put their weight and emphasis, and eventually month to month. For now, I still think that markets are poised to go lower. Eric Mwadit, Mwadit.com. Be on the lookout for part 1 of my US market analysis for this weekend. Otherwise, enjoy your weekend. Peace and blessings. E-A-C-S. Woo!